Wednesday, April 12th, market analysis, Stan Ehrlich, and we have a whopper involving bearish engulfings in major stock market indexes in progress right now. I'm making this recording early at 8:15 California time, normally between 9 and 10, because of the importance of these reversals that are happening as we speak. So I always start out with the stock market indexes, the S&P 500 typically, and here we go. Now remember, we did have a bearish engulfing ER sell signal red on the 4th of April. Today's high on a gap up exhaustion, I think. Gap up opening after good bullish, supposedly, news by the Fed, the CPI, I believe, and core. But everything has been given away, and we're now down a point on the day, and we were overbought within the allotted amount of time. We have a higher high than yesterday and a lower low than yesterday, so it's a bearish engulfing because the current quote is negative, lower than the previous close. All the criteria for another bearish engulfing. This one, because it's now forming a double top in a resistance area, is particularly profound. We see often when a month, maybe less, 2 and sometimes 3, very rarely 4 bullish or bearish ER signals clustering, but 2 are not all that rare. Here we have it right now. And remember, we have to stay below the closing price of yesterday, or we don't have an outside down day. We would have an outside up day, which is totally different. Seems kind of silly, just a minor couple of ticks up or down would make a difference, but over half a century, this is what I've learned. So yes, bearish engulfing, ER sell signal in progress right now, S&P 500. Remember, I often see a retracement inside of the range of today, whatever it's going to end up being, and I think we're going to see new lows before the day is out, maybe dramatically new lows. So whatever range we end up with, I'm looking for a retracement in the next few days to get short if you don't get short now. ER1 is already short. ER3 waits for the retracements, so we have to see if we can get one in the next few days. If we stay on today's closing price below yesterday's closing price. All right, let's look at the DIA. We might even have a bearish engulfing on the DIA, not quite. And now what's significant about the DIA is it banged up against a major bear trend line. That's new. It did it on the opening or very shortly thereafter, after a gap up opening also, as you might expect, because the spider did that as well. And we now have almost, and I think it's going to happen before my recording is over, yesterday's low on the DIA was 336.01, and today's low so far is 336.25. Super close to a red bearish engulfing ER sell signal after testing a major bear trend line that's been good since last December. That's pretty decent. That's 4 months, 4 or 5 months. That's not a bad trend line, but it's the only first time it's touched it, giving us some evidence that it's legitimate, plus the fact that it did it on a gap up this morning and everything's gone. We're now lower on the day by a little bit, 20 cents, but there's no strength anymore. And we almost have a bearish engulfing. Let's look at the QQQs. This is a very significant comment here, I think. In the last couple of weeks, the Qs have not, like the DIA did, make a new high. The Qs didn't make a new high. There's a divergence happening here of sorts. Excuse me. So the highest highs on the Qs were a week ago and an overbought condition up against a resistance area and almost closing an old gap. I think maybe there's a tiny bit left, but for all practical purposes, it's done. And it wasn't able to rally even close to its highest highs in the last few days. And guess what we've got right now? A bearish engulfing red ER sell signal, like the S&P 500 and the micro E-mini and the E-mini. So everything is starting to get very bearish here. I shouldn't use the word very. Bearish enough, downside technical correction enough to at least close these gaps that I've got outlined here in this red zone on the Qs. So it's not too far down to go, and something happened. It moved a little bit, so I'm going to pull it down where it should be. Sorry about that. Should come down to at least 308.30 on the Qs in the next few days, and it could be before the end of the week. Today's Wednesday. I wouldn't be surprised. Bear markets, and that's a bear trend market. Bear markets fall much faster than bull markets go up. But technical corrections in a bull market, which I think we're about to have, it just started today, I'm pretty sure. You can never be too sure, though. You know, don't get cocky. Technical corrections in a bull trend do not necessarily fall that quickly and that fast. It's one of the characteristics of a true bear market that things just crash and get very, very bad, especially toward the end when you get exhaustion and weakness. So what have we got? We got a bearish engulfing in the S&P 500. We got a bearish engulfing in the QQQs, and we got almost a bearish engulfing, and I think it's going to happen before the day is out in the DIA. And watch for the 336 up here to go to 335, and that'll be the indication that it made a lower low than yesterday's low and turning red. One quick check on that comment. Yesterday's low again was, 601, 6.01. So any 6599, for example, will be 2 ticks below yesterday's lows. All right. Wow. This is, again, very significant. We still have to stay below the close of yesterday in order to have, well, all these statements I've been making valid, supposedly valid. So if there's a big rally, I'm an idiot, but we'll see what happens. Futures, we have a corroborating, so to speak, bearish engulfing in the E-mini right now, also double top. I'm going to have to mention, people, and I've done this twice before in the last couple of weeks, that there is a slim chance, but at least I'm aware of it, that this is a head and shoulder top. Your shoulder is back in November and early December, the high of which is December 13th, the first shoulder high, which wasn't quite overbought, too bad. But we did get overbought at the top of the market on February 2nd, the head of the formation. And they're both approximately 2 or 3 weeks or so in size, similar. Now, we've got a double top with bearish engulfing ER sell signals on the potential last shoulder high that hasn't even broken out to the downside yet. So if we break out to the downside, which I think we will, the question is, how is it going to act between 4095 and all the way down to the red support zone, which I do not expect to be challenged? I don't think we're going to come down below 3,900 at all. I don't even think we're going to get below 4,000, to be honest with you. So this should be just a correction in a longer-term bull market. And this head and shoulder idea is going to go bye-bye, because in a few weeks, we're going to be making new historical highs. Well, for the year, put it that way, new highs for the year. Okay, next chart is wheat. Resistance levels above got tested. We're trending lower. I expect to see, frankly, the buy signal that worked for a few days, excuse me, totally fail, and new lows. Next chart. Bonds. We have a bearish engulfing ER red sell signal today in bonds. It is an outside down day, and it was overbought within the previous allotted amount of time. In fact, the high day at resistance, or a teeny bit above it, is yellow, and that's a signal that you're probably going to start soon some sort of downside correction. Well, it started the next day. A few weeks ago, it took several days for it, after yellow, for it to finally start, and it wasn't a very big correction. Next chart. So that's bearish for bonds, and I'm expecting to see 129, maybe lower, 126-ish. Next chart. 10-year notes, not quite yet. And even if we did have an outside down day, we would not be getting a bearish engulfing because we were not overbought on this last rally. It's a little disappointing, but we still have a bearish engulfing candlestick, which is bearish by itself, but it's not one of my automated 100% entry and exits system. Next chart. So I'm looking for more of a dip in the 10-year notes. Well, we're going through resistance on the crude oil. That's interesting. But at the same time, we're overbought. And actually, today's high is almost exactly, I probably should raise that little resistance level top a little bit higher. That's a little bit better. And move it over to the right somewhat. Good. So we're right there, actually. If you went short now, where's your stop? Real close. Granted, a gutsy trade, but the reasons are significant resistance, and it goes back quite a ways, overbought conditions, and a gap to close under the market. Those three things right there, and you'll probably find more, are very, very interesting to me. Next chart. That was crude oil. I'm looking for a downside correction here. Next. Spider, we already talked about. No. Heating oil. Oh, ladies and gentlemen, 337.04 a moment ago on the DIA, and it might, when I wasn't looking, have turned red. Oh, so close. We need, remember, 336 anything on the DIA, 336.99 to have this turn red. And I think it's going to do it very, very, very soon here. All right, back, I'm sorry, to the futures. So heating oil, neutral, but I do think this major historical support area is going to get broken in a while, but it's taking a little longer than I expected, but right now I'm pretty neutral. Next chart. And that is going to be the natural gas. It did stop at the resistance line, and now it's starting to make new lows for a couple of days, looking for lower prices. Next chart. Gold, silver, and platinum. We bought the low of the break for a couple of month time period. Smack dab gold, and it was the date of February 28th, the green bullish engulfing, ER buy signal. And this strategy is available. Email me at info@ersignals.com. info@ersignals.com. So we almost made a new high for the trend. We've given most of the gains away, and we're only up a slight little bit. And it does have some minor characteristics at the moment of kind of giving up upside momentum. I don't like that, but I've got no signals per se, and any steady to higher close would be okay. Keeping an eye on that a little closer, but no signals per se, looking for higher levels. Next chart. Silver, yes, we bought the bottom of the break on March 10th, the low day. And guess what? We have new highs again today. That buy signal for ER1 was around 20 and a little bit higher, 2030, let's call it 20.30. And we are now at 25.30. Looking for higher levels, except we're overbought. I wouldn't buy it here. I have had one sell signal that failed a couple days ago, I may get another one real soon. Next chart. Platinum, we bought the bottom, second low on a double bottom, the lowest low, and we're almost a new high ground. All three precious metals were long from the bottom. Next chart. High grade copper, neutral, not much to say. Next chart. Soybeans, buy signal might be starting to kick back in again. I'm friendly. The trend has been up since July. We did get oversold and turn around only a couple of weeks ago. I'm looking for higher levels. I'm looking for new highs above 1540-ish. Next chart. Trying to bottom out. Not doing a real good job of it in soybean oil yet. New lows for a couple of weeks. A previous buy signal didn't work. But we're not near oversold. The trend is kind of ambiguous, but long-term neutral to lower. You got lower highs and almost lower lows. So bearish, not particularly aggressively. Next chart. Soybean meal. Trend is up, interestingly enough. And a previous buy signal did not work. So I'm neutral here, not sure. Next chart. Corn, previous sell signal a few days ago is not working out as I expected. We did have a good profit for a day and a half, nothing special. And I'm looking for lower levels, but I don't know if I'm going to get it. I don't like the way it's acting at the moment. Fail safe is always the yellow dots. That's always our protective stop. Whether you're long or short, the yellow dots to stop, which would be 660 and a quarter. Next chart. Live cattle. Yo, we just skyrocketed here in the cattle market after a bullish engulfing ER buy signal on March 24th, 2 days after the lowest low for a big break. This is obviously a longer-term bull market since June and March of last year, a year ago, creating a broader double bottom formation. And this is now overbought. So not a good idea to be buying it up here. But if you're already long like our system is from the bottom, you're in, a big profit. Now, the sell signal that we did have on April 13th would not offset a long position if you are still long from a previous bullish signal. We don't get out and reverse because of a new short sell signal if you are long. We need to get stopped out with the trailing stop, our STS smart trailing stop technique. Then we will take a new short sell signal. You get a little worried that you're going to get stopped out, but that's not following your disciplines. Trading systems are all about disciplines. Absolutely. Next chart is hogs. Bullish buy signal got stopped out, small loss a couple days ago. Still looks to me like it's trying to bottom out. I'm going to wait. Next chart, OJ. I told you, don't chase after markets that are strong and yellow for days and days like OJ. I think it's topping out, looking for a correction back to 260. Next chart, cocoa. Same kind of comment here. Cocoa was not able to make a new high for the trend, although it was the new high closing price, it wasn't above the previous tops. So here we are down substantially today. And the fact that it got overbought and then couldn't make a higher highs after getting back into neutral RSI territory is not a good sign. I think it's topping out for a correction. Hey, but the trend is up. Let's wait for a buying opportunity a little later. Next chart. Sugar. Don't chase after markets that are yellow on the overbought side. We are now having a big reversal. We might end up with a bearish engulfing key reversal. I got to check DIA again. We're at 337.20. It might have dipped down and I didn't notice it. Low enough to turn it red? No, it didn't. How about that? Not quite yet. So, new bearish engulfing on the E-mini, and I started out here. We're looking for a downside correction to close some gaps on the spider there are no gaps on the E-mini and a lot of these futures contracts because they have such long trading hours. They're hardly closed except on weekends, like forex. They're emulating forex, really. So gaps may eventually, in the decades to come, disappear because markets will be becoming more and more and more 24 hours, 366 days a year, never closing, even on weekends and major holidays. They may not be very big volume, but that's what I think is going to happen in the long term here. That's it, ladies and gentlemen. One last check on the DIA at 337.16. We need to get just down to 337.00, which will be a low, one tick lower than yesterday's low. And if that happens, this bar, which is yellow overbought, bumping against a major bear trend line and an up gap on the opening, is going to turn red. And we are 10 ticks away from that at this split second. 337.10 last trade. I need 337.00 or lower. And then I need to stay below the previous close in order to make these bearish engulfings, which has happened today in the spider, the E-mini micro, the E-mini itself, the QQQs. The only one that's left is the DIA, and it's so close it's ridiculous in order to have an outside down day. Okay. And it's not 699. I'm sorry, I had the wrong number. I need to get down to 336.00, not 700, 336.00 or lower, which is a tick below yesterday's low on the DIA to turn red. Thank you very much. Exciting day today. Let's see what happens tomorrow.